Today's episode is brought to you by Stream by AlphaSense, an expert interview transcript library that integrates AI-generated call summaries and NLP search technology so their clients can quickly pinpoint the most critical insights. Start your free trial at www.streamrg.co/PMC. That's STREAMRG.co/PMC. This podcast is for informational purposes only and is not an offer or solicitation of an offer to buy or sell securities. SNN Network, SNN Inc., and the Planet MicroCap podcast and the representatives are not licensed brokers, broker-dealers, market makers, investment bankers, investment advisors, analysts, or underwriters. We do not recommend any companies discussed. We may buy and sell securities in any company mentioned and may profit in the event those securities rise in value. We recommend you consult with a professional investment advisor, broker, or legal counsel before purchasing or selling any securities referenced in this podcast. Welcome to the Planet MicroCap podcast. I'm your host, Robert Kraft. Thank you all so much for the support and for tuning in. Do me a quick favor. If you like what you hear at Planet MicroCap, please take 2 seconds and give us 5 stars on Spotify or Apple. This helps us with the search engine so that more folks can also discover and engage with all things microcap stocks. Vegas is in the books. Our team and myself went well over 100% at full intensity. And I'm not going to lie, I'm still recovering, but it was all worth it though. Last week, the Planet MicroCap Showcase Vegas was a massive success. And this is thanks to all of your support. The feedback post-event has been incredible, and I'm already excited for 2024. As we announced last week, you don't have to wait for our next event in Vegas to come hang with us. We'll be back later this year in Vancouver. Introducing the Planet MicroCap Showcase Vancouver, taking place at the Fairmont Waterfront on September 6 and 7, 2023. More information to come, but for the time being, see you in Vancouver. My guest on the show today is Darren Chervitz, portfolio manager at Jacob Asset Management on the Discovery Fund strategy. This was the last recording I did prior to the conference, and I'll be sharing the live podcast from Vegas next week. And in the last 12 to 18 months, I've noticed a few firms changing the name of their microcap strategy to the Discovery Fund or Discovery Strategy. And there's actually a bit more nuance to its reasoning that from a marketing perspective can actually be more inclusive. So Darren jumps on to discuss the strategy name change, plus a full-on deep dive into microcaps, specifically how he thinks about trends and how that guides his investment process. Thank you again for tuning into the Planet MicroCap podcast, and please enjoy my conversation with Darren Chervitz. Darren, thank you for joining me today. How you doing, man?
It's a pleasure, Bobby. Thanks for having me. Excited to do this. Talk all things microcap.
No, talk all things discovery. It's not microcap anymore. You know, it's the discovery.
That's right. We didn't make that name change a couple of years ago. We could talk about it later if you want. We can talk about it now. What's up to you?
Dig in. Tell me. I mean, I was, I'm joking about it a little bit.
Yeah.
But like, I'm curious because I would love to know whether it's like because of like the microcap, like everything associated with it, which
right.
That some of that stuff still exists for sure.
Yeah, for sure. There's a negative connotation with microcaps. I mean, it depends on what market you're in. Clearly, the one we're in now, there's a negative connotation.
And who you're talking to, right?
Yeah, exactly. And also, there's no specific Morningstar category for microcap. You know, I'm in the small cap growth category. There's no microcap specific investors. There are some, firms or investment advisors that may be looking for microcap, but in general, it's not a thing, right? I mean, it's got this kind of penny stock negative connotation with it, and so it was a bit of marketing on our end in the fact that let's differentiate a little more. We also have a small cap growth fund, so it was another way to kind of create somewhat of a different strategy. But there's also a more legitimate. I mean, these are all legitimate reasons, but there's even a more legitimate reason, which one of the things that I think is important. The Discovery Fund, I kind of look at it, and we'll get into this, I'm sure, a little bit as like a public venture capital vehicle. And so I'm starting very small. We're starting early, and I know I'm going to make mistakes, right? There's a lot of risk in these type of names, and I'm going to make decisions that won't pan out. I want to make sure the decisions that do work out for me really work out. And I think, generally speaking, success begets success. A company that's doing well, stock is rising, it often continues. Until something steps in the way or gets in the way of the momentum, it can continue. So I didn't want to have to necessarily sell a name that's working, a name that I really like, just because it goes past this sort of arbitrary market cap value, whatever that is. We compare it to the Russell Microcap Growth Index, which actually now is pretty high in terms of where you can be in market cap. But I look at it as kind of a billion, where microcap stops really being microcap. I know there's been a lot of market cap inflation over the years, but to me that's kind of a key level. And our fund is still very much so a microcap fund. I mean, if you look at, again, my peers in the small cap growth category, there's no one close to us. I mean, our average market cap is somewhere between 100 and 200 million. And again, next closest peer may be 500, 600 million. There's only a handful of below $1 billion. So we're still very small, but I wanted to have that ability to hold on to names that do well. Because again, in a venture capital vehicle, which I'm not suggesting we are, but I kind of look at it a little bit like that. You're going to have mistakes, and you need your successes to overcome those mistakes and do very well. And in my investing history, we've had names that have just done extraordinarily well, and we ended up selling it at perhaps too early of a point. So
right, yeah, no, it makes all the sense in the world. I think I think that makes more sense than like everything having associated with, and maybe I'm just being biased because I'm hosting MicroCap show and all this stuff, I'm family space, all that stuff.
Sure, of course.
But even beyond that, I think it makes more sense that main reason what you're saying right there is like, if you have a fund that's specifically just microcap and it's not more generalized like discovery where you still work within, you're still looking at the same, microcaps and stuff like that. But let's say you have, even 1-2 of them run past, the arbitrary three, like we have it as 300 million market cap. It's like, what would your rules say? Your rules would say, oh, you got to sell once it's beyond 300 million, and not let that run and now reflecting the fund's performance. Like that just seems silly.
No, it is silly. And remember, every successful stock at one point was, I mean, it may not have been in the public markets, but at one point it was a small company. It was a microcap company, right? And we'll probably talk about it at some
unless
point.
You were a SPAC, you were just automatically just shooting. That's stupid. Sorry.
Well, it's funny. We'll talk about SPACs too, because so much about the last. I mean, oh my God, these last 3 years have been just
goofy, dude.
Wild, dude. They've been wild. As in, I've been doing this for most of my professional life, basically all of it. I mean, but this is the kind of wackiest 5-year period I can remember. And maybe it's 3 years, but it feels like 5 years. I don't know. And I've been through a .com bubble burst. I've been through, obviously the 08, Great Recession. I mean, those were crazy, but this is just continuous. And every day something new seems to kind of pop up as something that you haven't seen before, something a little bit unique. So anyway, it's but the one thing that I have learned, one of the things that I've learned is that, again, you can make a good decision and let that ride, and it can make your career, it can make your fortune. I mean, I think maybe we might talk about this later about Apple. We have a fund called the Jacob Internet Fund, which was launched really at the tail end of the .com boom. And in that fund, after the .com bubble burst, we invested in Apple, and it was trading at 25 cents. It was trading at a $4 billion market cap. 25 cents split adjusted. At the time, it was $14, but split adjusted was 25 cents. And I don't know if you want to talk about that experience at all, but
go. Yeah, this is I'm loving it. Go.
All right. So yeah, I know free form discussion.
We're going, man. It's all good.
All right. So anyway, we invested in that company because I was a huge. I was a journalist in my pre days, and we can talk about that too. But when I was a journalist, I would write often about Apple, And Apple always, the fans they had, it was, you write a story about Apple, you were going to get deluged with customer emails. And if you said anything slightly negative about Apple, you were going to get reamed. I mean, they were the hardest fans to deal with in the world. So I always had this kind of like somewhat negative feeling about the company because of that experience. But I admired the products. And when the iPod came out, which was their music player, MP3 player, I loved it. And I wasn't an Apple user. I didn't use, since college, I really didn't use much Apple products, but this was a product. They launched it for PCs. And so they opened up the ecosystem a little bit, and I love that product, and I thought it was a game changer. And so I looked at the company; it was trading $4 billion market cap. They had $4 billion in cash on their balance sheet at the time. So it was basically a zero enterprise value at the time. So we invested a healthy amount in the name, and obviously, the rest. The problem is, along the way, we kept selling the name. Right? It was $14. It would get to $30, and they launch an iPad. And I'm like, what is this? I don't think this is going to work. I'd be skeptical. We'd sell some stock. They launched the iPhone, and we think like, oh my God, this is, how are they going to compete against the major players? This looks so different. We'd be skeptical, and we'd sell more Apple. And along the way, we just kept trimming, the position. And actually, we sold more when Steve Jobs died. We sold our remaining shares, and I was against it. I thought we should always hold a little bit of Apple because it's a great story, a great success story, and kind of like, how entrepreneurs like frame their first dollar up on the wall, that they made. I kind of felt the same way about Apple. This is a great story for our firm, but we sold it just a couple of years ago. But if we had held on to our initial position of Apple, I mean, I don't, it keeps me up at night, those nightmares of what the firm would have been. And so that's just, again, getting back to the point of, if you got something that's working in MicroCap, which is a tough environment to play in, there's a lot of crap. Sometimes I call it MicroCap. I admit it. And you got something that works, you gotta, you want to be very careful about when you sell.
Without a doubt. No, that's an incredible anecdote. I mean, usually I always ask everybody their, a great investing experience that changed your career. And I think that's probably, there's a lot of folks that can relate to that one, right? Where they just like, really what? Like Apple's kind of a perfect example. By the way, are you still a shareholder in Apple?
No, okay. I told you we
no.
I mean, I hate it that it's no longer. Yeah, no, I got
it. But no, I think a lot of folks can relate to that, because there's been a few in MicroCaps over the years that have been like kind of culty names that everyone's like, I mean, I can use this one because we talked about it so much on the pod, like Expel. Who would have thought this, like, film over the car, like would be what it is? I'm not a shareholder.
Not either.
But another one we missed. But like, it's stories like that are just so emblematic of our space, right?
Yeah.
Of just like, you don't realize, oh, that's gonna work, okay, and you think to yourself, oh, that worked. Well, that next inflection point that happens, that's another flash in the pan, possibly, right? Because you're so conditioned in MicroCap to think like, I don't know.
Yeah. I mean, you're skeptical, and for good reason. We've all been burned with our fingers on the stove, and and thought we had something that didn't work out. And so, it's very natural. And I'm, as a former journalist, I'm naturally skeptical too.
Oh, so, sure.
So there was always this, you don't want to be piggish. You want to be thoughtful about, valuation. But sometimes, and I think a lot of people feel this way about, like, this is not obviously MicroCap, but Tesla. A lot of people, I don't own Tesla. I never understood the valuation, but that's how people felt. They just believed in Musk. They believed in all these ancillary opportunities, that the valuation was going to find a way to grow into its valuation. So I think you wanted to say something. So
Darren, the one observation I've had recently in talking with some management teams, and we host due diligence series, doing these long form interviews with management, and obviously doing this. But one observation I've had of late is this idea of hunting for tailwinds. I don't know if do you know what I mean by that? Like, it's part of the justification of, your pro for an idea, right? Catalyst trends. And that to me is kind of fascinating, because I always ask every company, value catalyst for the rest of the year, What are some industry tailwinds that are looking favorably for you?
Yeah.
And I like asking that question only because I like kind of hearing the various reasons. Obviously, you want to hear that for the various reasons why for potential growth, but
Right.
it's I don't know. I've been feeling like it's been grasping a little bit in certain ways. I don't know if you've had that experience.
Grasping, the companies are grasping to like tell you what.
No,
Yeah.
I mean they're all reasonable like tailwinds that I
Right.
like any logical person would be like, okay, so things are
Right.
going, we're going more electrified and EV, just using that as an example.
Yeah.
But then you're kind of like, okay, well, is that truly the tailwind that's going to catapult your company, or is that just like kind of a general tailwind that may or may not actually have a positive effect on your company because you're so small or something?
No, it's a interesting area to explore. I think trends and themes can. I've fallen into this trap plenty of times where you think something is imminent, something important change in whatever is happening, a trend, and you want to find a play there, and so you end up making an investment that doesn't work out. Like cannabis is a great example of it. We have a couple of cannabis names, and I still really much believe in the long term in that market. And, I think there are going to be winners, right? There are going to be big brands, there are going to be big retailers. I think eventually it's going to be not universally accepted and legal. It will be state based, but for the most part, I think that trend is going to continue at a pretty nice pace. But right now, there's so much turmoil in the market, and ultimately, cannabis is a commodity, and so companies are really struggling to make money off it. There are a lot of regulatory hurdles right now. The federal government is standing in the way. But the point is, you can have the trend right, and your jockey is wrong. The horse you bet on is wrong. So I think trend and thematic investing, I do it because I do like to think about where the market is going, where there interesting things are happening. But you have to be careful. I mean, I'll give you a great example, and this is a holding of ours, is IZEA. I don't know how familiar you are with that name, but
yep.
It's an influencer marketing company. And this was I started investing in this probably 8-10 years. I don't even know. It's been way too long. Again, nightmares. But I was convinced that influencer marketing was going to be a huge market trend development. That people, consumption of media was being so fragmented, and people were not, they were cutting their cable cord. They were, going to all these. They were dividing their time on media on all these different platforms, and they were trusting these regular individuals to give them information about products and services that I just thought like, I have to find a way to invest in. And IZEA was one of the ways. They were actually a pioneer in the space. They had a product called Paper Post, which really created the whole influencer marketing space to begin with. And so I hopped on as an investment. I felt fairly good about the CEO, Ted Murphy, and I was it hasn't worked out. Let me put it that way. I'm still an investor. I still have hope that they're going to figure things out, but they just weren't able to take advantage of what was a huge trend. And it is also interesting that question that you ask about catalysts and tailwinds gets conflated, because investing is supposed to be a long-term process, right? We want companies we can hold for 10 years. Like, who cares if they have a successful catalyst in 6 months, if 2 years some other technology completely makes them obsolete? So it's a tricky question. I do ask it. I do pay attention to the answer. We're graded every day, certainly every quarter, and so it's a nature of the beast. But I think you can get caught in that trap.
I think that's an interesting way to think about it, actually, and that's maybe something I might adjust when I do even ask that question on my end, because I mean, look, we're a news organization, right? So we're trying, we want folks who to get a better understanding of how they should think about it at the current time, and also like you could even ask management teams, and some of them might not know like what that tailwind could be into. I mean, it's easy on like, EV stuff, right? Like, yeah, everything's going electrified,
Right.
Net zero, all that stuff. That's clearly a 10-20 year trend that is clearly happening. I live in LA, like everybody's got a friggin' Tesla here,
Right.
or some kind of hybrid.
Right.
not a shareholder, but 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 it's interesting in some of these other like influencer market, because I don't know if that, because also you have to think about too is like, all right, is that a failure of the model, or is that just maybe that tailwind doesn't really fit what they're actually trying to do, and they're just trying to pigeonhole what they're doing into this tailwind in order to maybe get a boost in stock price or something like that.
In this particular case, it absolutely is a tailwind. It's just the bigger companies were able to accrue most of that value.
Yeah.
Right. There wasn't really this opportunity for a third party player to insert itself into the space. So Google, Facebook, even though they were able to basically create the technology and establish the relationships with these advertisers and reaching these individual influencers. Again, I thought it was going to be so fragmented that it was going to be tough for those big players to keep up and to make it happen. And so even though IZEA has some very interesting relationships, some very good technology, they really, they just weren't able to take advantage of it. So, and it's not over. Like I said, and I still think they have a shot at being a successful company. I don't want to, IZEA, again, we talked about Apple being a $4 billion company with $4 billion on its cash. IZEA has 70 million of cash and a lower market cap. So, and so all they have to do is show they can be self-sustaining business. And I think the stock will do well from here, but it unfortunately hasn't panned out the way I'd hope. And I do put a fair amount of blame on management, because I think they haven't been shareholder friendly throughout the process.
That's always fun.
Oh yeah. And that's very typical. I mean, management is everything in investment, but it's certainly probably even more important with microcaps, I think.
Absolutely. So I want to dig into some kind of, obviously you now it's called the Discovery Fund, but I mean, it's like we said at the top, it's been a weird 3 years. How have you been able to navigate the fund strategy and finding, what that ideal investment is for the strategy through these last, 3 years, and especially the last 12 to 14 months where microcaps just been,
yeah, no,
tough.
it's a tough environment. It's been super humbling. I mean, I had a 5-year run from 2017 to 2021 that was very good. It was top, it was top of the category. I had a feature in the Wall Street Journal for the after the 2021 year, where I think we were up 70% after another big year, and it was all very exciting. It's certainly surprising given that COVID happened. I thought, oh my God, we might go out of business. I mean, like, that period of time, like I was saying at the beginning of the podcast, this what's happened the last 3 years, I don't think you could have predicted. And it's certainly just a wild time. And I knew things were getting goofy, right, with the market. I mean, you saw with meme stocks, you saw with, GameStop and Wall Street Bets, and you saw with crypto and NFTs. I mean, I was just seeing capital misallocated in ways that was very reminiscent of the dot-com bubble and bust, which we went through as a company. And our, again, our main product, Jacob Internet Fund, certainly went through that roller coaster. And so I was leery. I had, like, I would tell our board every time, like, this is, I know things are going great now. I feel uncomfortable, And so, like, I thought I was trying to position the fund in ways that would hopefully minimize some of what I considered, to be a little bit risky of a period. And it honestly, it didn't pan out like I was hoping, and some of that was, names that I thought might be somewhat resistant to a overall downturn or a risk off environment ended up not being offering as much protection as I thought. Some of it was, I had periods where I had a fair amount of cash, which is not something I normally do. That I consider, people invest in Discovery Fund. They want to be invested in microcap and growth names. They don't want to be in cash. So I don't often do that, but I had a fair amount of cash. But then you get a redemption, right? People get nervous. They take their money out. Now I have to raise cash. I have to sell stock to meet that redemption because, I had cash, but not that much cash. And so now you're selling stock in names that are illiquid, right? Names that often don't trade more than sometimes 50,000 shares a day. And so that can exacerbate the issue you're going through. So this last 12, 14, I think even 18 months really has been humbling for sure. And it hasn't necessarily changed the process so much. I think you still got to think long term. You still got to go with the methodology and process that you believe in. I think that's important to not change just based on the current day to day. But I certainly have one thing I've done, for instance, is I've invested in very few new names over the past 12 to 14 months. I'm sticking with the names I know, the managers I know, the concepts, the business models I know, and being very careful about stepping into new names. I think there will be an opportunity to go look for new names after the .com bust. There was a bunch of names that were trading under the cash they had on balance sheet, business models that still had, I thought, promise, and we invested in a bunch of them and ended up panning out. I think we'll get there. I don't think we're done. I really don't. I don't think we've seen the bottom here. Just to be completely upfront, we did a project. You mentioned SPACs. We did a project a few months ago looking at some of these broken SPACs. There's so many, and which for me was exciting a little bit. I think of the fund as a kind of a venture capital vehicle, and here are these companies that are coming to the public markets way before they should, right? I mean, these are basically venture opportunities in the skin of a public vehicle. And so I thought, okay, let's take a look. And again, I couldn't find anything that really excited. I mean, there was so much junk that came to the market during that period. And so, like I said, I think before long, hopefully we'll get to that point where I'll feel better that the worst is over and bluer skies ahead. But I'm still relatively cautious.
Absolutely. And listen, you're not alone, right? I've talked to managers every day. In fact, that interesting point that you said about cash, like I was just talking to a guy who's coming to Vegas the other day. He was like, dude, there's been time I've been 95% cash because, you just don't know. And also just like, they look at money market accounts too. They're just like, all right, like, do I
get 4%?
Get 4% right now? Or do I gamble on, this hooplehead that might say something silly?
Yeah, no, I think if you're an individual investor, for sure, there are times where you just sit on the sideline, take your bat away, and you wait for a better pitch to swing at. Now, again, it's very tough as a institutional fund manager to make that kind of call, because that's a huge call. If you're saying I'm going 95% cash, when like I said, people can withdraw their money at any time from my fund. They can, and they do. They take it out when they want, and that's their prerogative. If they're in the fund, I expect that they believe those funds should be invested in what I say I'm going to invest in, which is microcap growth stock. So, I think if I'm right, they'll appreciate, the caution and the cash. But if I'm wrong, that's existential career risk.
For sure.
So,
well, I mean, another thing that's been coming up a lot more recently is, especially amongst microcap fund managers, because you even mentioned it yourself, like sometimes you're betting on the business. It might be extremely liquid. It's probably high insider ownership. It barely trades, but it's a good business. So I don't care. I'll size into the position, whatever. But then you have times like this where it's just extremely difficult, because you might have a redemption or something to get out, and because maybe it might not be the highest conviction name. So you're like, all right, I'll get rid of this one to get back, whatever. But I've heard, in speaking with some fund managers recently, liquidity has become a lot more important. Like a lot more important than it seems like even in recent years. I don't know if you've been feeling the same thing, but I mean, it's been interesting to see.
Like, again, getting a little bit back to the name change. Microcap is an orphan space now. I mean, there are very few managers focused on it. It's a lot of retail that's in it, and retail has been burned unbelievably so in the past 2 years. So they generally aren't as engaged as they should be. Now, again, that if you have a long-term focus, that's great. It opens up opportunity and you're willing and able to hold. But you're in an environment where if you get a redemption, you have to find money to pay off that redemption. They're going to get their money one way or the other. So if you're in a name where it's very tricky to get out of, then you're caught in a bind, because you'll make the situation a lot worse. And that's I don't usually have 15% cash or 20% cash, which I had sometimes during those periods where I was really concerned about the market. But I like to have at least 5% cash because, again, because of where I'm in the microcap space, liquidity is important, and being able to get out of the names is trickier than if you're in Apples and Teslas of the world. All right, sell it. But for me, it can be tricky, and sometimes I make decisions of when I sell based on liquidity, which is not ideal, right? I want to make selling decisions based on my investment thesis failing or other reasons, and if I need to raise money to meet a redemption, and I need to, I want to sell, like you said, the names I have less conviction in versus the names that just trade easier, right? That should be my fundamental, go-to strategy. And sometimes you can't do it. So I like to have some cash on the side to meet those redemptions. Liquidity is important. I think you're right. It's probably more important. In general, my rule of thumb has been not to invest in names which have a market cap less than the size of the fund, which today is somewhere in the mid 20s, higher upper 20s range. So I wouldn't invest in anything smaller than that today.
Yeah, no, absolutely. I mean, dude, that's the hard. That to me is the hardest. Like even more difficult than raising capital. Which is definitely a whole other set of worms. So let's just put that to the side. But just in doing the job as a fund manager, that what you've talked about is, in my opinion, the most difficult part. It's not even finding the best names, because like that's why you're doing this, right? Is because you have confidence in yourself. Yeah, you think you're a good picker. So like
some days you have more confidence, some days you have less confidence.
Sure.
But yeah, you definitely think.
But in terms of the mechanics of when you have outside capital coming in, and it's not just your own money that you're playing with, like that just makes things so, oh my God.
Yeah, it's tricky. And that's why I say if you're an individual investor, retail, who cares about liquidity? I mean, unless you, for whatever reason, are that wealthy that the size you have in a name matters. But for the most part, it's even in the most liquid names, it's pretty easy to get out of a name as an individual. But when you're talking about a decent sized position, unfortunately, it is a consideration.
Mm-hmm. No doubt. Let's also, I mean, look, it's called the Discovery Growth Fund. You're looking at growth, microcap growth stocks. Let's talk about some growth sectors recently that, I mean, you already kind of mentioned, what's going on in cannabis. I know we were talking offline about, even a crypto investment that you got out at the right time, or at least before all the shit hit the fan.
I would say so Voyager Digital was the name that we were kind of discussing, which was a name that really propelled, was one of the big propellers of our performance in 2021. And, we invested in, I think it was late 20, it's trading well under $1.80. And it went up. I don't forget where it got as high, over 30 for sure. So that all of a sudden it becomes a huge position of the fund, right? We like to start small in a lot of our positions. We feel comfortable with the name, but we haven't maybe totally completed our due diligence. We want to let things simmer a little bit. We want to get to know management better. We want to understand the market. So sometimes we'll take token positions or small positions in a name. We call them kind of our bench in the portfolio. We have a bench, and then we have core, and then we have kind of the stars that are names that we feel most comfortable with. It's kind of how we divide it. And so, sometimes you have those bench names, and all of a sudden they go up 10 times, and it's now one of your major positions. And so you have to decide whether, it continues to be something you want to be heavily invested in or not. Fortunately, I think, we did make money in that name, despite the fact that obviously everything that happened after ended up being, going bad for crypto and specifically for Voyager, which to us was a little bit of a surprise. Again, this gets to the point of management, which is hugely important and yet very difficult to trust your evaluation. I think, again, my journalist background has helped in that regard. I tend to think I ask good questions. I have this kind of natural skepticism. I think I can read people pretty well. But there are times where you get hoodwinked. And this was the case. The CEO of this company had a pretty good track record. He was high up at E-Trade, very much. I should have been very heavily in tune to risk, the riskiness and the compliance aspect of his operation. And he wasn't. I mean, obviously, he engaged in some loans with Three Arrows, which ended up blowing up, and it blew up his company. And so that was a bit of a shock. And, but yeah, cryptocurrency, it's something that I feel very conflicted about. I own some crypto, but nothing huge. But I believe in some aspects of the story for sure. You look at how, what the government I think is doing to, the dollar, and with all the debt, and I think there are some technological innovations hidden within crypto, which I think will be taken advantage of. But it needs regulation. It needs to, find a way to operate within the system. I know a lot of the appeal of crypto is it's not in the system, and so it can't be managed or regulated or controlled. But you see what happens when it's the Wild West. Just scams on a daily basis, really bad risk decisions, and ultimately for the technology, I think, to get widely adopted, there needs to be a higher level of regulation.
Oh, without a doubt. And look, I actually feel the exact same way as you when it comes to it. Like, I feel very conflicted. In we host another show on our network called the Dead K Bounce Experience that's hosted by Caitlin Cook, and she does a phenomenal job of talking with folks and really kind of digging deeper, trying to be that bridge between traditional finance.
What was the name of that? I didn't hear.
Check it out. It's called the Dead Kate Bounce Experience. It's hosted by Caitlin Cook. We've had some really incredible people on the show, and I will say the number one thing that gets talked about the most on there, even within because she's talking to mostly crypto native folks that are like really entrenched in the space, is regulation on it, right? I mean that at the end of the day is the just one way or the other.
Right.
Right.
Clarity.
Just something that will help all of us better understand, like, okay, well, how do we understand? Because especially from the microcap perspective, like, I joke with her about it all the time. Cause like, there's so many, there's still quite a few publicly traded crypto names that are, microcaps.
A lot of miners, Bitcoin miners.
And I just don't know how to think about them anymore. And that's not to say what they're, they don't have legitimate businesses or not. Like, they seemingly do, right? Publicly traded, It's supposed to have transparency, all that kind of stuff, where companies like FTX didn't. And it's still there's just so much stink, and I feel like that stink has been around all of these growth sectors right now. Just, I mean, sure, you could say because we're in a risk-off environment, there's a lot of uncertainty and everything like that. But I think even if we weren't in a risk-off environment, there would still be the stink. I mean, of
crypto in particular,
crypto, and then within all these growth sectors,
I mean,
crypto and cannabis, psychedelics. I mean,
and you have gene therapy, I think, is another interesting kind of. I think I feel more confident about that making it.
I don't ever like saying there's stink around biotech, only just because like. That industry won't ever go away, because we need that industry. Like, that's right. My whole take. I mean, again, this isn't like go now buy a basket of like biotech microcaps. Please don't do your own due diligence or anything. But at the end of the day, that's something that we need that type of competition in order to advance us as a human race to solve.
But it has a stink. It has a stink because
there are aspects for sure.
Yeah, capital is so hard to come by, and biotech.
Well, that's the
fuel it needs. I mean, it needs that. To drug development is such a tricky business, and it's costly, and it's just fraught with risk. And so right now, if companies can't raise money, they might have the best technology in the world, but it's not going to make it to the market, and that's a loss for society. But again, that's that when interest rates rise, when you're trying to value these companies on far off profits, and people aren't interested in looking 10 years down the road, this is what you get. And it's the same with crypto. It's the same with biotech. It's the same with any, longer term trend that may be very interesting, but investors are more focused on the here and now, which, is what you got. I mean, with crypto, I did, when we were going through it, I really did make a lot of comparisons between the .com bubble and burst. I thought the similarities were, incredibly salient in my opinion. But the one difference that I had is I was convinced the internet was going to change life as we knew it, in business and social and personal interaction. I mean, any way you could think of entertainment consumption, I could very clearly see how the internet was going to make a difference. Crypto, I think, is a tougher sell. Here we are, I want to say, when was Bitcoin?
12 years. Yeah,
12 years,
12, 13, 14 years.
And right now it's still primarily a vehicle for speculation and criminal activity. That's just the truth. So the store of value argument is finally kind of coming to fruition here. I mean, this was the first month where you saw Bitcoin move up because I think of concerns about the overall system, which I think is if you're going to make a compelling case for Bitcoin in particular as a crypto, that's the case you want to make, and so it kind of did work on that level. But the use cases I think still have yet to really come to fruition, and I think so. It's very tough. How do you value? How do you? Value
and that's actually the main thing Caitlin and I go back and forth on, because we all I think are in a general agreement that there is value somewhere to be found within what we've experienced for the last 14 years with crypto and blockchain technology. There's something, but it's just not at the same level. I think that everybody agrees that like how the internet changed our lives. Like, right. Yeah, there might be aspects of it that will change our lives in some way. It's still very confusing as to what exactly that is. And sure, we've done some interviews where, we've talked about how, crypto has been very revolutionary in other parts of the world, third world countries, and how there's, that it's been very helpful and free flow,
that is another solid case for
and that's a legit solid use case right there. The part that I then get wrapped up in is like, all right, well, why is it Bitcoin? Could it be something else?
Why was it gold? Right?
I know, but still, I don't know.
I mean, I 100% agree. Like it's, almost so many financial assets, so many asset classes the valuation is based on psychology, confidence, and there's no more true story than crypto. I mean, obviously that's a big underlying reason. How else are you valuing this asset other than other people will use it? I mean, like that to me is ultimately what it comes down to. So it's very susceptible to fluctuations in people's confidence. And so why is it Bitcoin? Well, because Bitcoin was first. It was actually kind of cleverly designed, very cleverly designed. Doesn't work as a transaction mechanism because of the technical limitations, but it does appeal on its fungibility, on its decentralized nature. There's lots of appealing aspects of it, but mostly it's lasted. At some point, the fact that it's here, it's trading at 28 whatever thousand, when if you told me all the things that were going to happen in the crypto space over the last 12, 20, and I would have thought Bitcoin would have been 4,000 maybe, that's legit. And this is someone who, has not bought as much as I like, but the fact that it's been able to survive a tumultuous time within crypto suggests it has some underlying value. Now that could disappear, and people could say, of course it did, because what is Bitcoin but zeros and ones? But I think it's at some point longevity does matter. It's why gold is looked at as a store of value. It's under threat by Bitcoin, but it's still looked at as a store of value. So anyway,
for sure. Damn, dude, we can jam on so many things right now. I mean,
it's fun. These conversations are fun, and I really do enjoy kind of talking the business. And I don't know,
100%. Well, we're getting to the end here, so I wanted to kind of close out on, we're still within the craziness. Yeah, the last 3 years have been crazy. It ain't slowing down. It might not slow down for the rest of our careers, man. It might.
The craziness.
Yeah, I think the craziness.
Please, I need a break. I don't know. You don't think this? It does seem like the cycle.
I mean, how would you define the craziness, right? Like, what does like a not crazy time look like? Is that
just I don't know, maybe like a day where you don't feel like the world's gonna collapse?
Well, other than that, yeah, that's just our own that's just our own mental state being tribesmen here.
I don't know. I think it's the news flow, man. I mean, again, we had a pandemic, right? Yeah. A massive worldwide pandemic that again, we can talk about all the ways we've been, we've had to adjust our day-to-day lives because of that. And, in the good, some good, a lot of bad. And then we've had, what came from that, which was an unprecedented amount of stimulus. that, you know, created a lot of this speculative frenzy that I was discussing. And then you have this retrenchment, and now you have, massive financial institutions, going under, and like I said, like, I don't know, it just feels like from a geopolitical standpoint, from, the macroeconomic standpoint, it does seem like there's just a tremendous amount of volatility now, and it doesn't seem like, you're right. I don't see the let up. I think it will happen at some point. There'll be some level of calm, I hope. It's very difficult to operate in this type of world, for sure, because again, you want to keep your eye on the prize, you want to think long term, but when you have all this day-to-day volatility and the news flow being just, almost, you couldn't script this type of activity, it becomes very difficult to decide, where to best allocate your capital. And so I'm hoping it slows down at some point. But I think you do make a good point. Like, the cycles seem to be speeding up. We had .com 09, 2000, we had the Great Recession 08. Here we are, 15 years later, going through what could be another very perilous time. And that seems like a little bit of, the pace of humanity, how it's evolving. And maybe it isn't a hamster wheel you can get off. It's just, it is what it is. But I don't know. I don't think that portends well for humanity.
100%.
I don't want to end it on that note, though.
Yeah, let's end it on a positive. I mean, what for you, and now either searching or looking to maybe allocate to names that well, what are some of the things you're looking for to manage through these weird times? I guess we'll call it weird.
Yeah. I'm gonna go back to what I said in terms of management is very important. You want to find, I think some of them, the people that I respect, the most in the industry, like a Buffett, like a Peter Lynch, they've said, like, you want to, I think Peter Lynch said what he said, like, invest in a company that can be run by an idiot, because one day it will be run by an idiot, and that's very true. And, Buffett has said similar things about, I want to get good businesses, that could be run by bad managers. That's fine. What good managers can do is look in the future, be able to pivot better, listen to people around them that are talented, and adjust to, what's coming ahead. And they see the future in, I think, ways that are meaningful in terms of adding alpha. So, that's important to me. I remain focused on that. There are a lot of, again, interesting trends and technologies that I think, the pace of innovation, just as the pace of some of the negative things that we're talking about that are happening in the world, the pace of innovation isn't slowing down either. So there are things that, I'm amazed at every day. AI being obviously the latest, kind of hype cycle, that, people are focused on. And then I try and think about how that's going to affect my portfolio names, positive and negatively. And so, you just got to, I'm the best thing about my job by far is learning. And, I think it's an important factor in being a successful investor is loving to learn and loving to read and challenging your beliefs. And I think it's important. And that, to me, just remains, the vast majority of my day-to-day existence is, I think in any environment, even some of these negative ones that we can paint, there are still going to be successful companies that get created, start, built, and eventually become that next Apple. And that's my goal every morning, is to try and find that next one. So,
dude, Darren, I think that is, I feel much better about everything after that. So close this out, man. Where can our audience go and find more information on you, to get in touch with you, as well as Jacob Asset Management?
So the best place is probably jacobmutualfunds.com is our website. We have Twitter handle Jacob Funds at Jacob Funds. I'm on Twitter, D Chervitz. But our lawyers, for whatever reason, have been very constrictive about what we can say on the social media site. So we're pretty quiet, especially for a company that prides itself on being, technology focused and capable. So honestly, the best way is reach out to us via the website. Check out our SEC filings. We have a new active ETF called the Jacob Ford Fund, JFWD. You can find that on any major trading platform that's out there. And so those are some of the best ways.
Perfect. Well,
Awesome.
Darren, thank you so much for joining me here today. I really do appreciate it. This podcast is for informational purposes only and is not an offer or solicitation of an offer to buy or sell securities. SNN Network, SNN Inc., and the Planet MicroCap podcast and the representatives are not licensed brokers, broker-dealers, market makers, investment bankers, investment advisors, analysts, or underwriters. We do not recommend any companies discussed. We may buy and sell securities in any company mentioned and may profit in the event those securities rise in value. We recommend you consult with a professional investment advisor, broker, or legal counsel before purchasing or selling any securities referenced in this podcast.